What a wonderful day. Good morning, good afternoon, good evening, good night, wherever you are, whenever you are. Welcome to a new Breakout Solutions live stream. I'm your host, Matt Batiri. I unfortunately should have got changed in my green shirt, but do not worry. The Bitcoin price is pumping. The Breakout Solutions members are happy because we got back into the market early this morning because of what I'm about to show you. So strap yourselves in. I want to give a big shout out, first of all, to my man, Tim, one of our awesome graphic designers here at Breakout Solutions, created the new head banner here for our YouTube channel. So shout out to you, Tim. Thank you for doing that because now it looks absolutely amazing. So without further ado, let's dive into the charts. Now, what did I see this morning to tell you guys in today's title that we were going to pump? So there is a hidden bullish divergence across a few indicators, and I want to point these out. So for those of you that do not know what a hidden bullish divergence is where we have a higher high in price and a lower high on anything, really. Basically, it can be the RSI, it can be market cipher B, it can be on most indicators that do display divergences. So we can see that basically over the weekend, we had a pretty slow weekend, but we created a higher high, which is great. And on the RSI, which is probably the most used indicator, we did get a bullish divergence, as you can see. So lower low on the momentum wave, higher high on the price action. And what I like about today's pump is I live in the Asian trading zone. So normally we don't get a whole lot of action because there's not a whole lot of liquidity in the Asian market. But we did today. We saw an absolute amazing candle just a few minutes ago. This is on the 15-minute chart, so about 45 minutes to an hour ago. Bitcoin pumped. If I go to the 1-minute candle, Bitcoin pumped from $27,291 all the way up to $27,857. So that is, as a total, about 2% and a $600 move, which is quite rare during the Asian trading zone. But I was expecting this. I woke up this morning, as I normally do on my Monday, before the week closes. I do some technical analysis where some areas of buying and selling that I'm interested in doing for our clients. And this just kind of looked bullish. So I got myself into a couple of longs personally, but we don't do any leverage trading with our clients' accounts. We just do spot buying. I actually got us in at about 27,000. Things looked quite good. And I was like, I think this thing's about to rocket up, especially because the indicators were flashing that hidden bullish divergence. So where to next? Where is Bitcoin going to go? Well, right now is not the time to be jumping into the market because we've just had this huge pump, and these huge pumps normally lead to a little bit of sideways and retracement. But as well, because the New York exchanges have not yet opened, we might get a pullback before continuation because all these guys missed this beautiful pump this morning. We had a liquidation event, about 6 million longs got liquidated, and it's pushed the price to the upside. So if we zoom in just to the charts, the next main area that I would be looking to sell Bitcoin, and if you watched my video last week about why I'm not pulling the fib to this wick right here, is because most exchanges did not create a low to this low. This was just a big liquidation event on Bybit, which is the most preferred trading platform for most traders. There's a lot of liquidity and there's no funny business. But the next major zone will probably be this golden pocket right here. So around about $29,189. So I'm going to look for some resistance around about there. If we are able to crack that resistance, we have one final resistance of 78.6 or 0.786, and the point of control of this entire trading zone, which I haven't really looked into. Let me see if I can find that for you guys before I go any further. I'll find the trading zone for that, the point of control fixed range profile. So let me just do this for you guys. I can tell you another area if there is one. 30,200. So 30,200 lines up with the 786. So more than likely we're probably going to, break this because, most people are going to short here. It's going to add a little bit more liquidity, and we probably come up to the 786 because it is the point of control of this sideways trading zone right here. Just add it here a bit as well. So that makes me think we could go to 786. That's where things are going to be interesting because as we've discussed, I'm sure multiple people on the tube have discussed, we have this apparent head and shoulders, and it will complete the right side. Now, most people, most traders, really, really old school traders, do say that in a head and shoulders pattern, the right shoulder needs to be lower than the left shoulder. Right? It needs to be lower than the left shoulder. Now, I think that all strategies like that should be thrown out the window for crypto. I just feel like crypto likes to run its own race. It doesn't follow traditional finance. Some patterns break a little bit differently. And Bitcoin just in itself creates very interesting trading patterns. I mean, look at this. Won't find this in many other stocks or commodities. They just trade a little bit differently. And Bitcoin is just a different beast on its own. So it wouldn't surprise me if we take this high right here, right? Just to make people think we're going to push to the upside. So we create a little bit of a higher high and then we come back down. And more importantly, we could see a swing failure pattern of the ultimate high of 31,869 on Bybit. So for now, if you miss the move, too bad. Just wait for a bit of a pullback in the current price action. And then I'd be setting some sell orders around about here and around about here. Doesn't mean we're not going to go higher, but a smart trader is just going to take their profit. So we, for example, got back into some Bitcoin at around about 10% of our portfolio this morning. So taking some off the table with a 10% gain, that's, not being too greedy. That's just playing it smart because we're still in a bear market technically. And I will stay here and state that we are going to be in a bear market till we see the halving. The halving is the catalyst till next year. We are in an accumulation period. So I do still believe you should be trying to take your quick profits out as not financial advice, but that's just what I'm doing. So it's a 10% rise to the golden pocket. It's going to be a 13.275% rise to the 786. And if we can reach all the way to the previous high, it's going to be an 18.91 return. Always be selling into green candles, never buy into green candles, and always buy in the red candles and don't sell in the red candles. If I was to give you any advice as a retail investor, stick to those principles and you will make good money. If you buy whilst we are in a green candle, you are FOMOing in. And as soon as the price pulls back, you're going to freak out that your money is going to go to zero and you're going to probably more than likely exit as a loss. So let this thing play out. Sell at these either of these locations, as I mentioned. We will get a reaction from these because these are major levels and just wait for a pullback. So sell here, buy back a little bit lower. So these are just really simple strategies. Now, there's a couple of things that I've just sort of realized. Now, if we just take the this trend line from the Bitcoin chart, even if we didn't take this low and we just took it from this low, which most major exchanges have, it looks like we could form a little bit of a rising wedge. We could be forming a little bit of a rising wedge, so look out for that trend line as well, possibly being resistance. A rising wedge is a bearish pattern. Okay, so normally we'll you'll have the flagpole, which is here to here kind of thing, and then you normally from here you would duplicate this flagpole, and then wherever it breaks, this is like the intended target, which does bring us back down to my lowest target, which would be around about here, that $19,500 to $20,000 level. So is 30,000 inevitable? Well, in the short term, it kind of makes sense to come up here. People will sort of start FOMOing in. It's going to add a little bit of liquidity, and then we might get that that pushback if we do stay in this rising wedge. But at the end of the day, we cannot make assumptions. We just have to wait to see what price action does. So look for some resistance if we continue pumping around maybe 28,800. If we blast through that golden pocket and then the 786 and eventually up here. So there's 4 levels that I'd be looking at to sell some Bitcoin position to buy back lower, because at the end of the day, the game plan is to stack sats. If you can make an extra Satoshi here and there in the long run, especially in the bull market, that could be the difference between dollars, thousands of dollars, hundreds of thousands of dollars or millions of dollars, depending how big your bags are. So guys, that is it for today's update. It's short and sharp and to the point. I've given you my levels of where I'm looking for the upside, because we are moving to the upside. No point talking about the downside, but I have repeatedly talked about this zone right here being a demand zone. So if we do come back down, look for some bounces around here, and if we do break that level, look for some bounces around here, around that $19,500 to $20,000 level. Guys, thank you all for watching. If you have any questions, please feel free to comment below, and I will catch you guys next Monday for my next Bitcoin technical analysis video. Peace.